Alright everybody, welcome back. Quick update here on ORGN Materials Incorporated, ticker symbol ORGN, listed here on the NASDAQ. $1.23 on the close, down 2 cents, 1.6%. And we looked at this here, let me pull up, I don't know, it wasn't too long ago, I don't think. Yeah, it was back mid-September. September, it was like right here. As it was kind of running up, it was channeling down, looked like we had a pop. I may have mentioned potential bull flagging in the Discord. I don't know, I'd have to go back. But you can see we had a run up right here to about $1.90. And then we've been dropping since. So let's get into just the earnings as of late. So we bottomed out here, and this was, in my opinion, viewed as a potential overreaction, especially since the company was forecasting that they were actually going to like start getting into production and they were going to start generating revenue. And then you see they came out, they beat on the revenue side by a couple of 100,000. Boom, that brings some life back into the stock. Channels down going into earnings, and they actually missed on EPS and revenue, but the stock happened to pop. We ran up, we start to channel down, and we can see that as of last quarter, even though revenue technically is up year over year, which is probably the positive that's being highlighted, we technically missed this estimate here by a little under $100,000, but we're posting wider than expected losses, and when we were already losing money. So in my opinion, it's probably going to remain quiet until earnings, as you see, about the third week of February. So you still have quite some time after these earnings were just reported, like 3 weeks ago. But we'll get into the earnings report. And right now on the technical side, you can see going from these absolute lows here at the end of March of this year, connecting to that low right there, August 5th, 24. That is from the bottom. That is the up and up. Right? And you can see we technically had a flash crash below that support trend line, and then we instantly pop back above it to the 20-day. And if I zoom in, you can see extremely flat over about the last week or so, just kind of hanging out, but technically bouncing off of that support trend line. So in my opinion, this is the first level you're going to have to keep an eye on, which looks like about 121, 122 going into tomorrow. And if you do happen to break, again, this was from our gap down. This was the level we were trying to get back to, supposedly 364 on the gap down. So if we go from the top of that candle, cutting down across those tops before we gapped up, you can see that this trend line right here, if we do happen to break, we're looking at just below $1. So we're looking at like 99 and a half cents, 99.7 cents. So technically we could potentially drop back below sub $1 and get another compliance notice from the NASDAQ, which of course they got recently, but we were organically able to bring our stock price back above $1. But let's get into some recent news here. Swings Q3 loss. Revenue increases, reaffirms guidance. Yep, so we had a net income of 22 cents. Now we lost 26 cents. See, revenue was 8.2, up from 7.1 a million earlier. I mean, the fact that, again, this was a company that people were obviously counting out, and they completely beat the stock up down to 40 cents or wherever it went. So the fact that revenue actually did start to come in and beat some estimates, or were coming like extremely close to what we were expecting, believe it or not, that is actually a pretty decent sign for this company. The problem, though, of course, is the cash burn that they talk about, and losses have definitely accelerated, even though technically revenue is picking up year over year, but they talk about bigger and better things going into 25, so I guess we'll see what happens. Company maintains full year 24 revenue guidance of 25 to 35 million. We're reading. Higher product sales. Total revenue for the 9 months, 22.1 million compared to 15.7. That's what I mean. So technically the business, the revenue is growing, but losses seem to expand here. Loss from operations, a loss of 32.4 million compared to a loss of 12.1 million same period in 23 due to increased operating expenses, including a significant impairment of assets. Loss from operations, 68.7 million compared to a loss of 38.7 million same period last year. Net loss of 36.8 million compared to positive 30.9 million in the same period. But yeah, we had the warrants and whatnot. Net loss 70.2 million compared to positive 34.2 million. Increased operating loss. Products and services. In August of 23, Origin announced its PET caps and closures business, including the PCO 1881 compliant PET cap and a tethered PET cap designed to comply with European cap tethering mandates. Company completed the mechanical construction of its first furanics manufacturing plant, Origin 1, in Ontario. Plant is currently operating on demand with reduced staffing. Again, we did the update and they spoke about down here, they reiterate the workforce reduction of roughly 28%. So apparently they had too many hands on deck. And right now the plant, as they say, is currently operating on demand, meaning that the way I interpret that is they're not doing anything until they get an order. Profitability continues to engage customers. Origin 2 project. Again, the initial big drop off in this company, if you're obviously, if you haven't been keeping an eye on this stock or you have no idea it existed, they were doing this Origin 2 and then supposedly the timeline had to get pushed back several months, and then the construction cost, I believe, just the overall cost ballooned up by a couple of $100 million or something like that. And that's when everyone started kind of jumping ship and Wall Street started to beat up the stock. Company implementing asset-light strategy, Origin 2, focusing on partnerships, joint development work to optimize feedstocks, influence scale-up strategy. Workforce reduction of approximately 28%. When was that? In September. Okay. Company focusing on its PET caps, path to profitability. Having completed the factory acceptance test for its first PET closure manufacturing system, company is also engaging in strategic partnerships for mass production in Europe and North America. Well, I know they're coming out of Canada, and I know Trump has been kind of vocal about how he's upset with the trade deals taking place with Canada. So I would probably try to bank on business out of Europe more than North America. Origin is exploring, that's just my opinion, Origin is exploring asset-light strategies for scaling up its biomass conversion technology, potential projects in Asia. Issuance of common stock, also engage workforce reduction. Company has received funding from the Canadian Government Research and Development Program, which will be repaid over 15 years. Origin plans to focus on increasing near-term demand for its PET caps, redirecting resources from non-PET cap research programs to accelerate higher margin revenue opportunities. Company is also considering various plant designs. Okay, yeah, we break down all the risks. Okay. Let's just see. Again, we looked at this, middle of September, so let's just see what's going on here. CFO, sell some shares. Yeah, this was basically right after we looked at it, talking about the big workforce cut. Sees net cash burn of 55 to 65 mil on revenue of only 25 to 35 million. So we're essentially spending about $2 to make a dollar right now. Origin set for early profitability. Analyst highlights positioning for long-term growth, upgrades stock. This was all the way back August. I believe we read this the last time. Yeah, up the price target from $1.35 to $3. And we know on the technical side, we can also at least get back to $3 again from the gap down. We're looking for a potential run up to 364. But the problem is, again, we spiked up, and I understand that everyone's pumped that technically, again, revenue is up year over year, but the losses have accelerated drastically over the last several quarters. So that's why I feel until the revenue really chunks up above estimates, that's probably when you're going to see your next leg higher. And we can see that moving forward at the end of February, we're expecting a touch over 9 million in revenue and a loss of 11 cents a share. So that's why I understand at this phase of the business, this state of infancy, we want to kind of put a little more emphasis on the revenue as opposed to the earnings themselves. But at the same time, if you're going to kind of come close but come up short and post 8.8 million, while at the same time you lost like 21 cents a share when we were expecting a loss of 11 cents a share, in my opinion, the stock's going to get smacked up again, which is why I'm saying it may be the next quarter out, which would be May, third week of May, roughly, when we're expecting revenue, I believe, to jump up to north of like 20 million or something. So that's why, if that's when like the Origin 2 and well, not even just the Origin 2, but if that's when the next leg up of revenue is expected to come in that May quarter, then they're going to have to beat that estimate in order to pop back up and even try to get not only above these trend lines, but of course back to the gap fill. Because they're also, again, just burning too much cash in the moment, which is why, as I said, if we end up breaking this support trend line and come down to here and just kind of keep consolidating downward, and then we run up a little going into earnings, in my opinion, that would make sense. And then, of course, pending on what we get here, we'll obviously either pop to the high ones or maybe just kind of continue slipping down here into the 80s and then wait for next quarter to have a pop maybe. Because the cash burn is pretty significant. And I know, again, some people, you may not want to hear it or you don't want to look at it that way. And I understand that. But again, we've had a lot of examples of situations like this, companies losing $1.50, $2 to make $1. And you see that they kind of continue this downtrend until they either get themselves out of it or they just inevitably keep falling and reverse stock split or, right, Luminar Technologies, again, same thing, right? The company was generating revenue, but it was costing them an arm and a leg to do so. So they just kept dropping. Then we got the reverse stock split, so they're probably going to keep dropping. And that's what I mean. That's why right now could be kind of a toss-up. But yeah, technically this article that we read last time, advanced EBITDA break-even estimate to 2027 from 2029. They bumped that up. We read about that last time. There is potential for profitability as early as 26 due to ongoing discussions for further contracts and licenses. So 10 million in licensing income in 27, increasing to 20 million in 28. It's not enough in my opinion. But even if we come down here, market cap 180 million, we can see we've been posting wider than expected losses the last 3 quarters in a row. And look at how it's just accelerating here. Q4 of 23, we brought in 13 million, lost 10.4, net margin about minus 80%. Then we just completely flip that and we lose almost 14 million to bring in 6.8. Then we lose 19.5 to bring in 7. And then we lose almost 37 million to bring in 8.2. So they're saying 25 to 35 million. We have 6.8 and 7. So that's 13.8. That's 21, 22 million. So yeah, as long as they bring in at least 3 million, then technically they'll hit the range of 25 to 35 million. And they kept the cash burn at 55 to 65 million. Excuse me. And here we already lost 14 million, 19.5 million. So that's what, 33.5 million. And here we lost almost 37. So we lost 69 million already in the last 3 quarters. So this is why I'm saying, in my opinion, I do think it continues to trend downward. They recently regained compliance, I think. Okay, I read it. I don't know. I can't find it now. Maybe it was like in one of these articles. We believe we can sell as many caps as we can produce once commercial production is online. And this quarter of our factory, yep, okay. Hold on, here, yeah, hold on. Our current manufacturing plan calls for bringing 8 or more cap former systems into production by the end of 25, While we believe those 8 systems alone could enable positive EBITDA, we expect to add systems regularly for the foreseeable future to keep pace with the anticipated steep growth curve of the indicative market demand. As such, our expectation is to achieve positive EBITDA results on a run rate basis by the first half of 2026. Total cap consumption of over 100 billion caps per year, and obviously they're trying to break in and take a huge share of that market. Revenue is on track to begin ramping up in the first quarter of 2025. Pet caps are in the hands of multiple prospective customers engaged in testing and qualification, offering a strong pipeline of potential buyers who can purchase billions of caps as our systems come online throughout next year and beyond. So that's why, again, it may remain quiet for the next couple of months. And then, as they're projecting that jump up in revenue, if they even kind of come close, that's I think the stock is going to pop. Because if we look here, look, we're expecting again to come back to that loss of 11 cents, which technically is a little tighter than where it was at the beginning of 24. But then moving into 25, you can see how it starts to slowly narrow out. And you can see that now we're expecting a little over 9 million for next quarter. And then Q1 of 25, estimates right now are over 29 million. So if the company, that's what I mean, if we're actually able to see this business get the orders and go from high 8s, low 9 millions, and now they come in with whatever, again, even if it's like 26, 28 million, in my opinion, that may show more value than a lot of people may immediately think, because that growth year over year really can't be denied. And obviously, if the market really is that big, then it might only be a matter of time before they are able to hop the fence and go, again, positive EBITDA as they're expecting in 2026, originally 2027. Well, technically, originally 2029 got moved up to 27 and then 26. So that right there in and of itself is actually a good sign that date keeps getting moved up. But of course, again, we need the company to actually deliver. It all sounds great in theory, but 180 million market cap. If we look here, we have debt 9.75 million, cash down to 56.4 million. Free cash flow technically improved year over year. This time last year, minus 28.6 million. This year, minus 16 million. We do still have assets outweighing liabilities in both the short and the long term. If we subtract debt from cash, we're at about 46 million, we'll call it. Okay, we have positive equity, 358. And what were we? 46. So we're at like 404 million right now. You can see the book value technically has been dropping. This is the lowest it's been going back the last 8 quarters. It's down to 246. But we're at about 400 million. And that's why if we look at this current year, I mean, of course we could look at last year, but I mean, they didn't do any business. But if we look at this current year again, I mean, we're looking to bring in, we'll go with the middle of the range. We're looking to bring in 30 million and we're looking to lose 60 million. So that's negative 30 million. So that's why the quote unquote fair value of the business is like 360, 370 million in my opinion. But again, we don't know what's on the horizon to close out 2024. And it seems like we're back in the narrative of the more we bring in, the more we lose. So if hypothetically we follow this trend, the company may bring in 9 million, but it might cost them 45 million to do so. So that's why if we factor that in as well, now we're down to a market cap of like 340 million. And you can see technically that's higher than the current market cap. But just like we just looked at with POW, just because in the numbers it might be undervalued, if the earnings and the revenue and the losses themselves do not come in above expectations if we're not seeing the growth that we should be seeing, then we're going to keep beating up the stock, which is why I say, in my opinion, I do expect it to break this support and kind of channel down. But of course, we know that any piece of news can completely change the situation. And, you know, we could wake up tomorrow and, I don't know, someone could give them an order or something. The stock could jump to 160. So only time will tell. Again, in the numbers, the growth in revenue over time, you know, if you tell me, yeah, you think it's going to get back to $3, it absolutely very well could if the revenue starts coming in. But again, if they continue to slightly miss, it's going to be a reason for Wall Street to just keep them, again, not even tank them. It's just going to give them a reason to keep it in a downward consolidated channel until the revenue actually comes in and boom, kickstarts it into action. You understand? But again, that's just my opinion. If we extend, if we go from day to week, you can try to make the argument that you can like pull that trend line down a little bit. And if you want to look at the body of this candle as opposed to the bottom wick, then you can say that maybe the stock is still in an ascending triangle pattern. So, you know, I mean, it's possible. It is possible. Again, if it tightens up, keeps channeling here, then yeah, going right into earnings. I mean, we could have even a premature breakout, and then if they beat, it might just rocket right up to one of these lines here, 2.5, 260. That is very possible. But again, technically, over the last couple of quarters, we have been slightly missing the mark. And I understand that, like, it's a good comeback story because it got beaten up, it was so cheap, and then boom, you know, we started to get some good news. I get it. Believe me, I get it. But again, the losses that the company is currently incurring, that's why, again, if you're going to miss on the EPS and you're going to post a loss of 12, 13 cents again, you got to bring in 9.5, 10 million. That's the way I'm personally looking at it. If you're currently taking on more operating expenses or whatever the heck is going on, and you're posting a wider than expected loss, you're going to have to knock the revenue out of the park. Not even out of the park, but, you know, hit the mark at least, you know, 9.5 million. But we will see. Again, right now, it'll either continue to channel down if we break the support, or it'll stay up there. But let's look at stock charts real quick. Nope, I didn't want to do that. Nope. Leave me alone. So, we're looking here. We have the RSI. Just got up to about the middle of the road and pulled back a little bit to slight sub 47. You can see how flat. Again, we spoke about this. The stock just kind of leveling out here, just slightly bouncing off of that mid-Bollinger Band, sitting at 123. And again, we could potentially see a drop back to the 200-day and the bottom Bollinger Band of 105. That would bring us there. Yeah. 50-day moving average 135. But that would only be right there. Huh. MACD recently crossed to the upside, and then the stock completely flattened out. So, what is this? November 21st. Do you try to make the argument that you have a potential ascending triangle over the last 2 weeks? I don't know. I don't think so, in my opinion. You can see on the weekly also, I said that if we potentially break this support trend line, we can come down right here, which again is a touch above 99 cents. And you can see the 50-day moving average on the weekly, 99 cents. Looks like we tried to run up and potentially rejected here to reverse back bearish. That's why we might have a pullback here. And on the weekly time frame, you can see the MACD technically crossed to the downside about a month ago, going into those earnings. And of course, again, technically the numbers are increased year over year, but also technically they did miss estimates and post a wider than expected loss. which again is why if people are looking at like the long-term growth and Wall Street doesn't want to decimate it and they want to give it another quarter, like then I can understand if it kind of like bounces and just like slowly climbs up and then we go into earnings and we see what happens. I can understand that. Also, at the same time, the fact that losses have seriously accelerated over the last couple of quarters, and now we missed the revenue mark also, which was in my eyes the main catalyst, which is to why the stock bounced off the lows. Then in my opinion, if it breaks the support again and it starts to channel down, I would understand that as well. So it's in a very delicate, sensitive situation right now, even though technically in the numbers with the losses, the stock, I feel, has a fair value of about 2.5. But again, they're gonna need some positive news. They're going to need some positive news. And this, again, is really just a bounce from an overreaction with, again, positives were more here than here recently. So that's why if we had this big come up and then we kind of potentially even make, if you draw the trend line out too, you could potentially make the argument that we have a shoulder and a head, right? Which means we could potentially run up a little bit and then curl down and then break down. So there's a couple of ways that you could look at this one. But, I mean, it technically did get back above the 20-day moving average as well. So it could be tightening up here and then maybe getting ready to pop up to the 135 level. It really is a toss-up. But again, in my opinion, it's more of if you, truly believe that the orders are going to come in, and they mention, I know, 100 billion caps is the market. So again, if you think they're going to be able to get a piece of that market, or if, who knows, the Canadian government might continue to help them out. Again, this is why companies like this, in my opinion, it's... You could almost say it's not worth it. You could almost say it's not worth it. But in a situation like this, again, I'm not trying to bash your stock. So if you do like it and you did want to take a position, I would say, in my opinion, if I wanted to take a position, I would watch this support trend line. And if we hold it, I would consider taking a small position. But I would know that another miss or a downgrade could drop us right back down to $1. I would keep that in mind, in my opinion. And also, if we see it break the support trend line, I would wait, because I wouldn't feel the urgency to buy it here at 120 and change, because if we break the support, as we said, we're probably, again, at least we were looking at that 105 level as well. So that's why if it breaks that support trend line, you could probably get it 106, 105, or even $1, sub-dollar. So that's why, in my opinion, that's how I would play it. But again, it looks promising. I would maybe wait for more consistency, in my eyes. I really would. I don't know. It's just something, again, sometimes I go off my gut too. And, I could turn out to be wrong. But in my opinion, I don't know. My gut is telling me I wouldn't personally trust this one just yet. But again, for all of you involved who are hoping for good news, listen, I hope in a day or two they come out with good news and the stock pops for you. You know that. I hope everybody makes money. But I always have to be honest, and that's just kind of how I see it. So I guess we have to take this one from quarter to quarter and, try to keep an eye on our pricing and timing. And of course, potentially be wary of that reverse stock split if they continue to miss estimates, in my opinion. But again, you cross that bridge when you get to it. But I'll end it there. Once again, Stocks by the Numbers, I want to thank you for stopping by. If you have any questions, comments, or concerns, drop it down in the comment section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But of course, more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.